guys, welcome to my YouTube channel. In case you're new here, you're most welcome. If you're a returning subscriber, thank you for always supporting us. Today I want us to check on how we can trade the fair value gap the simplest way possible. Here we are going to make things very easy, very simple. As we grow gradually, we are going to make them complex as we grow. So what is a fair value gap? The fair value gap is an imbalance in price action caused when price moves so quickly in one direction that it skips over certain prices level. The market moves very fast. It leaves a gap in a liquidity between candles. So let's get into charts and see for example of what we are talking about. So click to your MT5. It opens like that, and let us learn how to find these fair value gap. Oh, how does a fair value gap look on a chart? Okay, the gap is the space between the first candle's wick and the third candle's wick that candle 2 skipped. All right, so the fair value gap is the space between the first candle's wick and the third candle's wick that the second candle skipped. For example, if we look at this candle, the first candle is this one. Its wick came up to here, and the third candle is this one. Its wick came up to here. So there's this space in between here. Let us mark it with a horizontal line. So there's that line. Can move it. Sorry, and there is this other side. And like that. So for example, if you look at this space in between this candle, this market was not covered before the formation of all these candles. Okay, so we are concentrating on this point. Okay, this is what is called the fair value gap. Okay, and how it's traded, you wait for the market to go on its way, then come back to this fair value gap, then you press a buy. Okay, and for you to press a buy, the candle that is formed or that touches the fair value gap must close inside the fair value gap or above the fair value gap. If the wick is inside, it doesn't have the problem. But in case the body comes and closes down here, that fair value gap is invalidated. And for example, guys, let's check on this. The market went up high, then came back, it touched, it went up again, it went up, then down, it touched again, it closed inside the fair value gap, and then it went up. You see, this is a very strong move. A very strong move. And a point to note, once a fair value gap has been touched for at least 2 or 3 times, that fair value gap is invalid. Now let's go back to the charts and look for a bearish fair value gap. Here we looked for a bullish fair value gap. Now let's go to the chart and look for a bearish fair value gap, and here we have one, guys. So as for this one, you can see the first candle it formed up to here, the wick is up to here, and the second and the third candle formed up to here. There's this space in between that the market didn't yet cover, but each and every time a fair value gap is formed, the market must come back to fill those orders. That's why the fair value gap is very important, because it's almost 100% sure that the market must come back and fill that space. So for example, this is a bearish fair value gap. We draw our first line there. Remember, we are beginners, so we are going to do it the simplest way possible. Yes, we move that one to that point, and then we take another horizontal line and you press it there and make sure it is at the right place there. Don't worry, guys, the aim here is to make money. Whether you're using the triangle or the straight line or the trade lines, it doesn't matter. The aim here is to make money. You don't have to be a pro to make that money. You just have to have the right information. Okay, you have to believe about something, and whatever we believe in, at the end, the results that we get depends on the information that we got. So the aim here is to make money, so make sure you stick. Learn it the simplest way and make money. So here we have our fair value gap. This is a bearish. Since we are going down, this is a bearish fair value gap. This space was not touched. Okay, so when you identify a bearish fair value gap, you wait for the market to go down until the moment it will come back and touches this fair value gap. Okay, until the moment the market will come back and touches this fair value gap. And as we said, for the fair value gap to be validated, this candle, the candle that forms when it touches the fair value gap, should not close above this line. So if it closes above that line, the fair value gap becomes a point of resistance. That means now market has reversed. There is a break of structure. Okay, the market has reversed. You'll have to wait for the market now to go on this direction, then come revisit this area for you to take a buy. Okay, you see, the moment a candle is formed above, we said for it to be valid, it is supposed to cross inside this fair value gap. So you see the second one closed above already, above this fair value gap, and this one even closed with the body. Okay, so when it does like that in either direction, you wait for that market now, because it has changed the character. So we are no longer on a down trade, we are on an up trade. We are on bullish now, and all you have to wait is for the market to go on its way, then come back touch the fair value gap. Make sure the candles don't close with the body below this line, and then you take your trade, of which this time round it has to be a bullish, like a buy. Okay, and also remember we said once a fair value gap has been touched for more than 2 or 3 times, the fair value gap becomes invalidated. You see, it was touched here once, twice, thrice. That's how we trade the fair value gap, guys. The simplest way. I know there are more complex way of doing it, but we are starting it simple. We go running day by day. So just a recap on how to trade a fair value gap step by step. Step 1, go to your chart, choose any time frame. Step 2, look for impulsive moves. And those are the wrong candles, guys. Always the fair value gap is formed mostly where there are long candles. You see long candle, long candle, long candle, long candle. That's mostly where the fair value gaps are formed. Step 3, spot the 3 candle pattern, of which we have said it's this is in between the first candle's high and the third candle's low. That is how you identify for a bullish fair value gap. Now, for a bearish fair value gap is usually between the first candle's high, the first candle's low, and the third candle's high. You mark that gap either with a horizontal line or with a rectangle, if you know how to do that. So trading the fair value gap to enter the entry point for bullish fair value gap, wait for the price to retrace into the fair value gap zone, enter buy. For bearish, wait for the price to retrace in the fair value gap and enter sell. Okay, that's it for today, guys. Thank you so much for watching this video. If you like it, please make sure you subscribe to the channel, like, comment, and share to others so that I can learn. I'll see you on my next one. Bye.